The United States is the richest country in the world, yet it owes more money than any other nation in history. How can a country be so powerful while carrying a debt that's over $34 trillion and still growing every second? If an individual had that much debt, they'd be bankrupt. But for the US government, debt seems to be business as usual. Today, we're going to break it all down. Who actually owns America's debt? And most importantly, does this debt actually matter, or is it just a number on a screen? To understand why the US is in so much debt, we first need First National Debt was created to fund the American Revolution. The US government spends trillions of dollars every year, but it doesn't generate that much revenue. Unlike a company that sells products or services, the government makes money mostly from taxes. But taxes alone aren't enough. So when the government needs more money than it brings in, it does what anyone in need of cash would do. It borrows. Now this isn't new. The US has been borrowing money since 1776. In fact, the First National Debt was created to fund the American Revolution. But back then, we were talking about millions, not trillions. Fast forward to today and the debt is growing at an unbelievable rate. Every second, the US government borrows more money just to keep everything running. And here's the part that surprises most people. This debt isn't just numbers on a government spreadsheet. It's owned by real people, businesses, and even foreign countries. A lot of people assume that most of the US debt is held by China, but that's not actually true. So who owns this massive debt? First, let's think. It would lose value over time due to inflation, pension funds, and even the Federal Reserve itself. When you put as many people think. It's not because the US is borrowing money from them in the way a person might take out a loan. Instead, these countries buy US Treasury bonds as a way to store their wealth. The US dollar is the world's reserve currency, and Treasury bonds are seen as one of the safest investments on the planet. Think about it this way. If you had billions of dollars in cash sitting in a bank, it would lose value over time due to inflation. But if you invested in US Treasury bonds, you'd earn interest while keeping your money in one of the most stable economies in the world. That's exactly why countries like China, Japan, and even the UK hold so much US debt. It's a safe place to store money. But here's what most people don't realize. Foreign countries only hold about 30% of US debt. The majority of it is owned by Americans. A huge chunk of the national debt is held by US citizens, banks, pension funds, and even the Federal Reserve itself. When you put money into a 401k or a retirement fund, chances are, some of that money is invested in US Treasury bonds. That means the US government actually owes a big portion of its debt to its own people. It sounds strange, but when the government borrows money, it's often borrowing from American citizens. If you've ever held a Treasury bond, even for a small amount, you are technically lending money to the US government. Now here's where it gets even more interesting. This raises a big question. Why does the government need to borrow? That's exactly what's happening on a much larger scale. Economists argue that as long as the US economy keeps growing, government collects money through taxes. But it also spends money on things like the military, healthcare, social security, infrastructure, and education. The problem is, spending has far outpaced revenue for decades. Imagine if you made $50,000 a year but spent $70,000 every year. You'd have to borrow that extra $20,000 and your debt would keep growing. That's exactly what's happening on a much larger scale. The US government keeps spending more than it takes in, and the debt keeps piling up. Some argue that this isn't a big deal because the US has never defaulted on its debt. The government has always been able to borrow more money or raise taxes to cover the interest payments. But others warn that this can't continue forever. At some point, the debt might become too large to manage. The big debate is America's national debt dangerous or is it just a misunderstood tool? Some economists argue that as long as the US economy keeps growing, the debt doesn't matter much. They compare it to a mortgage. As long as you can make the payments, it's fine. But others warn that too much debt could eventually lead to a financial crisis. Next, we'll dive deeper into why the US debt keeps growing, whether it will ever be repaid, and what happens if the government can't keep borrowing. The Federal Reserve, the central bank of the United States, also owns a significant portion of the debt. The Fed doesn't just print money out of thin air, it buys government debt to help control the economy. This is a complicated process, but in simple terms, it allows the government to spend money now and deal with the debt later. But if the US keeps borrowing at this rate, will it ever came, and your debt keeps growing, eventually those payments came very close. Every time Congress, everybody wants to be responsible for an economic disaster. In this breakdown useful, don't forget to subscribe and turn on the grocery store and finding that a loaf of bread now costs $50 so that it remains sustainable. Think about it like a credit card. If you have a $10,000 balance, but you're able to make your monthly payments without struggling, the debt isn't really a problem. But if your income stays the same, and your debt keeps growing, eventually those payments become unmanageable. That's the challenge the US faces. As long as the economy keeps growing and tax revenue keeps coming in, the government can manage its debt payments. But if borrowing gets out of control or interest rates rise too much, it could become a major issue. This brings us to a critical question. What happens if the US government can't pay its debt? Technically, the US has never defaulted on its debt, but there have been moments in history when it came very close. Every time Congress debates raising the debt ceiling, there's a risk that the government could run out of money. The debt ceiling is a legal limit on how much the government can borrow. If Congress doesn't agree to raise it, the US could be forced to miss payments on its debt for the first time ever. If that happens, the consequences would be devastating. The value of the US dollar could collapse, interest rates would spike, and global markets would panic. This is why raising the debt ceiling is always a heated political debate. Nobody wants to be responsible for an economic disaster. But some experts argue that the debt ceiling debate is just political theater. They believe the US will never default because in reality, the government can always print more money. That brings us to a controversial question. Why doesn't the US just print money to pay off its debt? Next, we'll dive into the dangers of money printing, why inflation is a hidden tax, and how the US uses its unique position as the world's economic superpower to keep borrowing without consequences. If you're finding this breakdown useful, don't forget to subscribe and turn on the notification bell so you never miss deep insights into how money really works. If the US government can print money, why doesn't it just print enough dollars to pay off its debt? It sounds like a simple solution. Just create more money and erase the trillions owed. But if it were that easy, every country in debt would have done it already. The problem is inflation. When a country prints too much money without increasing the value of goods and services in the economy, prices skyrocket. Imagine walking into a grocery store and finding that a loaf of bread now costs $50, or that your rent doubles overnight. That's what happens when money loses its value. History has already shown us the dangers of printing too much money. Look at Zimbabwe in the early 2000s. The government printed massive amounts of currency to pay off its debts, but instead of fixing the problem, it created hyperinflation. At its peak, inflation in Zimbabwe hit 89%. Money is created today. The Federal Reserve doesn't just in and buys these bonds itself. Essentially, your salary stays the same, the cost of living increases. $1 trillion is worth less in the future than it was when it was losing faith in the US dollar. Next, more money to pay off war debts, but inflation spiraled out of control. People's life savings became worthless overnight. So, if printing money is so dangerous, why does the US still do it? The answer lies in how money is created today. The Federal Reserve doesn't just print money and give it away. Instead, it creates money through a process called monetary policy. This involves adjusting interest rates and buying government bonds to control how much money is circulating in the economy. When the government needs money, it issues treasury bonds, which are essentially IOUs. Investors, banks, and foreign governments buy these bonds, lending money to the US in exchange for future repayment with interest. But when the economy is struggling, the Federal Reserve steps in and buys these bonds itself, essentially creating money out of thin air. This happened in a big way during the 2008 financial crisis and the 2020 pandemic. The Federal Reserve bought trillions of dollars worth of government bonds and other assets to pump money into the economy. While this helped prevent economic collapse, it also contributed to inflation. You might be wondering, if the US prints money responsibly, why do prices keep going up? This is where inflation becomes a hidden tax that affects everyone. Even if your salary stays the same, the cost of living increases, meaning your money buys less over time. In 2021 and 2022, inflation in the US hit its highest levels in 40 years. People saw grocery bills, rent, and gas prices surge, all while their incomes remained stagnant. At the same time, the US government benefits from inflation. How? because inflation makes old debt cheaper. Let's say the government borrows $1 trillion today. If inflation rises over time, that $1 trillion is worth less in the future than it was when it was borrowed. This means the government can pay off its debt with money that's worth less than when it was originally borrowed. This is why some economists argue that the US will never fully pay off its debt. It will just inflate it away. Instead of paying down trillions, the government allows inflation to gradually erode the real value of its debt while continuing to borrow more. But can this continue forever? What happens if inflation gets out of control and the world starts losing faith in the US dollar? Next, we'll explore the power of the US dollar, why the world still trusts it, and what could happen if the dollar ever loses its status as the world's most powerful currency. If you've made it this far, don't forget to subscribe and turn on the notification bell so you never miss these deep insights into how money really works. If the US keeps printing money and borrowing trillions, the US an enormous financial advantage that no other country has, strong that even countries that don't like the US still hold most countries can't do. If a smaller country borrows money, dollar system. In the 1970s, the US made and borrowing without the same consequences that other countries. Right now, the US can borrow at extremely low-based financial system. If the dollar were no longer this deep dive into how money really works, make sure to wealth, they often do it in US dollars. This gives the US an enormous financial advantage that no other country has. Let's put this into perspective. Imagine two people are borrowing money. One has a high-paying stable job and the other is unemployed. Who do you think lenders will trust more? The one with a reliable income, right? That's how the world sees the US. Even with its massive debt, the US is still considered the most stable and secure economy. Countries trust that the US won't default because of its strong institutions, military power, and history of paying its debts. This trust is so strong that even countries that don't like the US still hold US dollars and US debt. For example, China, America's biggest economic rival, still owns over $850 billion in US Treasury bonds. Why? Because it knows that the US dollar is the safest place to store its wealth. But here's where it gets even more interesting. The US doesn't just benefit from its currency being the world's reserve. It uses this power to its advantage. When the US borrows money, it does so in its own currency. This is something that most countries can't do. If a smaller country borrows money, it often has to do so in US dollars. This means it has to earn US dollars through exports to pay back its debt. If its currency loses value, repaying that debt becomes much harder. But the US doesn't have this problem. If it owes money, it can simply print more dollars. It never has to worry about running out of a currency it controls. This is a privilege that no other country has. Let's look at oil. The US dollar's dominance is largely tied to something called the petrodollar system. In the 1970s, the US made a deal with Saudi Arabia and other oil-rich nations. They would sell oil exclusively in US dollars, and in return, the US would provide them with military protection. Because of this, every country that wants to buy oil has to first exchange their currency for US dollars. This creates constant demand for the dollar, making it even stronger. So even as the US borrows more and more money, the rest of the world is still dependent on the dollar. This means the US can continue printing and borrowing without the same consequences that other countries would face. But this advantage might not last forever. Some countries are already looking for ways to reduce their dependence on the US dollar. China and Russia have been making deals to trade in their own currencies instead of the dollar. Cryptocurrencies and digital currencies could also challenge the dollar's dominance in the future. If the US ever lost its reserve currency status, the consequences would be severe. First, borrowing money would become much harder. Right now, the US can borrow at extremely low interest rates because demand for the dollar is high. If that demand drops, the government would have to pay much higher interest rates, making debt more expensive. Second, inflation could spiral out of control. If fewer countries wanted US dollars, the value of the dollar could drop, making everything more expensive for Americans. Third, the US government would lose much of its economic influence. Right now, the US can impose sanctions on other countries by cutting them off from the dollar-based financial system. If the dollar were no longer the dominant currency, it would lose that power. This is why the US fights hard to maintain its economic dominance. It knows that if the dollar weakens, it could trigger a financial crisis that affects not just America, but the entire world. Now, we'll explore what happens next. Can the US continue borrowing forever, or is there a breaking point? And what would happen if the US were to default on its debt for the first time in history? If you're enjoying this deep dive into how money really works, make sure to subscribe and turn on the notification bell. Let's continue. For decades, the US has borrowed money without serious millions of dollars every year. In fact, the US spends more. If the government raises taxes, business always found a way to pay its bills, even in times of crisis. Lapsing and loans drying up, companies would cut jobs, ceiling, print more money, or restructure payments. The world's economic superpower, it will always find a dollar. Nobody knows exactly when it's debt, just like you would on a loan or credit card. But here's the problem, the interest payments alone are hundreds of billions of dollars every year. In fact, the US spends more on interest than it does on national defense, education, or infrastructure. If the debt keeps growing, eventually those interest payments could become too big to handle. When that happens, the government has three choices: raise taxes to generate more money to cover the debt, cut spending on social programs, military, and other government services, borrow even more money, but at a higher interest rate. None of these options are good for the average American. If the government raises taxes, businesses and consumers will have less money to spend, which can slow down the economy. If the government cuts spending, it could mean fewer benefits for retirees, higher healthcare costs, or reduced military funding. And if the government borrows even more money, interest payments will continue to rise, making the debt problem even worse. But what if the US couldn't make its payments? What if the government actually defaulted on its debt? This has never happened before. The US has always found a way to pay its bills, even in times of crisis. But that doesn't mean it's impossible. If the US defaulted on its debt, it would cause a global financial disaster. The stock market would crash, investors would panic, pulling their money out of US stocks and bonds. The dollar would lose value. Countries that rely on the dollar would start looking for alternatives. Interest rates would skyrocket. Mortgages, car loans, and credit card rates would all become much more expensive. Businesses would struggle. With banks collapsing and loans drying up, companies would cut jobs, leading to mass unemployment. The closest the US has ever come to default was in 2011 and 2023, when Congress debated whether to raise the debt ceiling. If they had failed to do so, the government would have run out of money to pay its obligations. Just the threat of default was enough to make stock markets drop and shake global confidence in the US economy. So why hasn't the US defaulted yet? Because in reality, the government always finds a way to raise the debt ceiling, print more money, or restructure payments. But this comes at a cost. The more the US relies on debt to survive, the weaker its long-term financial position becomes. Eventually, there may come a day when the world loses confidence in the US economy, and when that happens, the ability to borrow cheaply will disappear. Some experts predict that within the next few decades, the US could reach a tipping point where its debt is simply too large to manage. Others argue that as long as the US remains the world's economic superpower, it will always find a way to control the situation. So, where does this leave us? For now, the US continues to borrow, spend, and print money, but make no mistake, there will always be a limit. No country can sustain unlimited debt forever. The key question is, when that limit is reached, what will happen? Will taxes go through the roof? Will social programs like Social Security be cut? Will inflation spiral out of control? Will the world abandon the US dollar? Nobody knows exactly when or how this will happen, but one thing is certain. The choices the government makes today will shape the financial future of every American. If you found this video helpful, don't forget to subscribe and turn on the notification bell. We're diving deep into how money, debt, and wealth really work, because the more you understand, the better prepared you'll be. Thanks for watching, and remember, financial knowledge is power. See you in the next video.